earnings season by talking about Costco, right? It is one of the top stocks on the S&P 500. People love it. And I'm still expecting to see the strong consumer out of that earnings report. But we're going to see. What are they buying? Have things changed in the mix of what they're buying? That's what I'm going to be looking at. And as always, I'm going to be tweeting out more charts as the earnings season goes on. So you can get me at Tracy Reinick. Just use my name on Twitter. You'll get those charts there. You can also get me on Stock Twits, but a little bit less over there. So if you want even more of the charts, go over to Twitter. And as always, you can get all of our earnings and stock news on our YouTube channel. You can go to Zacks.com/YouTube because we're going to have plenty of content there until my Earnings All-Stars videos come back, including the top stock picks of the week videos. You don't want to miss those. You get a lot of good stock suggestions and recommendations every week. Go to Zacks.com/YouTube to get those. But I'll be back in April with the start of Q1 earnings season. What's that going to look like? I'll see you then. So one of the first stocks is actually one of those recent IPOs, Rivian Automotive, ticker RIVN. And as you can see, it was part of the big sell-off in 2022. It's taken another leg down here in 2023. It's actually down 6%. Year to date, down 71% over the last year. What's happening with these earnings estimates? Because that's what really everybody's looking at. So they lost $14.78 a share in 2021. They're expected to lose $6.51 in 2022, so not quite as bad. And then $5.24 in 2023. So this is one of those that has no PE. And it's one of those that's not earnings positive. It's not profitable on the earnings side. So where does this type of stock go in 2023? We will see. Then we're going to switch over to one of the retailers I was talking about, Kohl's. We've talked about them a lot over the years. They have a pretty good earnings surprise track record, as you can see. They put together that very nice streak there during the pandemic, and then finally had another miss in 2022, but another couple quarters there of meeting or beating. But the shares have come down, obviously, off those 2022 highs, down 48.6% over the last year. Here in 2023, it's getting a little bit of a rally here, up about 16%. Shares are cheap at 9 times. And it does pay this really large dividend that I know a lot of dividend people are buying it for the dividend, but they have a history of cutting it, raising it, cutting it again. And so I'm not quite sure that this dividend is going to be safe. It is yielding 6.8% though. That's why everybody's in it. But you have to start to ask when you see those big dividends, can they keep paying this out? This is one that, maybe has those questions swirling, but maybe we're going to find out what's going on with, this year's earnings and what may happen to that dividend later on this year. Then we're going to switch over to the tech side with Salesforce. And Salesforce, as you can see, has a perfect track record. That's not easy to do because, again, we've had the pandemic there in 2020, 2021, and they kept just piling on those meets or beats, even with the slowing of their business, the layoffs, the co-CEO leaving. So there has been a lot going on at Salesforce, but they're still managing to keep it together. Now, over the last year, these shares are down 21%, but year to date, you can see that nice rally there, up 22%. The PE on Salesforce is 27.7, so not altogether cheap here. Not sky high, but not really cheap. So where does this type of stock go for the rest of 2023? We're going to see. Then we're going to have another tech name, Snowflake. They've actually put together a pretty good earnings surprise track record after a few rocky quarters when they first went IPO there in 2020. But otherwise, they've put together 6 big earnings beats in a row. The shares have come way down, though. but over the last year, now down 45%. Year to date, it's gotten a little mini rally, but you can see it's pulled back a little bit. Year to date now up just 3.4%. So people aren't not yet willing to commit to Snowflake here in 2023. It does have a PE expected to make 22 cents in fiscal 2023 and 46 cents a share in 2024, but that gives it a PE of 323 times. So Snowflake is definitely not one of the cheap ones, but is expected to actually have positive earnings this year, which is more than we can say for a lot of other tech and growth style companies. So this is definitely one a lot of people are going to be watching this week. And then we're going to get the ultimate in retail, the one everybody loves. And didn't I just hear Charlie Munger even talking about it? Costco, ticker COST. I know those of you out there, you're very loyal because why not? Look at the chart. Look what it's done over the last 5 years, even though 2022 has been a little bit more rocky. It also has a great earnings surprise track record with just, a couple misses there during the pandemic. So it's not as consistent as a few other retailers, but still pretty consistent on the green arrow side. And when it misses, it looks like these are small misses with that smaller red arrow. So that was the first miss you can see there in the last 7 quarters. 1 year, these shares are down 5.6%, but that's outperforming the S&P 500, which is down 9.5% during that same time period. Year to date, up 7%, but you can see it's pretty volatile there on the chart. What does the PE look like on Costco? Its PE is now at 34 times. So it hasn't been cheap for a long time, but it still remains, fairly expensive here. But people never betting against Costco and what this company can do. So that's why people still keep diving in. It does pay a dividend yielding 0.7%, but, that's not that great. It's under the S&P 500. It's less than 1%. So you're not buying it for the dividend, even though that's a little added bonus. You're buying it for this chart, which has looked like it's stalling out here. And maybe that's on a valuation basis. We don't know. Or anticipation of the slowing of the consumer. We don't know that either. But I'm on the sidelines with Costco because it's just not cheap enough for me to get in. But I know many of you are in it. And it's a great company and an interesting stock chart. And we're all going to be watching it this week for sure. It's a dark and stormy day here in Chicago, and my dark walls look even darker than normal. But it is the end of earnings season. And so this is also the last Earnings All-Stars video for Q4 2022's earnings season. And what's been going on? Well, it hasn't been as bad as everybody thought. So that's good. We have had some guidance cuts, obviously, but not as bad as everybody was anticipating. So the market isn't really taking a direction that much from what's happened in Q4. But now we're going to head into Q1. We've already gotten some guidance for that quarter and for the full year. But will that guidance be changing as we get those earnings reports in starting in April? I don't know. This is something that's all up in the air right now. Earnings are expected to decline in 2023 versus 2022. Obviously, the Fed is slowing the economy and it is working on corporate earnings. So let's take a look at what remains here on these final weeks of the earnings season for Q4 or the fiscal year, depending on what the company is doing. We're getting a lot of the retailers, and we're going to get a lot of companies that were recent IPOs, companies like Eventbrite or Nextdoor or Portillo's or Trex, companies that are smaller, that a lot of people are going to check out of, but you shouldn't. And I'm actually not bringing you those stocks today on this video. I will bring them to you on my Twitter account, so check over there. But I'm going to stick with the tried and true, as the saying goes. The large caps, a couple are retailers, a couple are techs. And what's going on with those? So let's dive right in.